Hello everyone, hope you're doing well. Welcome to another episode of Monday Markets brought to you by the FTX app. Links available in the description below, especially on a green week like this for portfolio tracking, one of the good ones. So go check it out, spot trading, zero fees, no leverage, can't get liquidated. All of those goodies are available in the description below. Support them because they support us and have been doing so for a while. Now, a lot has transpired since the last Monday Markets episode, so let's do a quick sort of survey of the landscape. We'll look at BTC, ETH BTC, and the S&P 500 slash Nasdaq. So on the Bitcoin front, you'll recall in the previous live stream I had some concerns that we had previous month's low that was untapped, and the month before that, the low of that month also untapped. Thankfully, this month we had another move sub 20k in the past week or so, and as you can tell, the market did end up trading through those lows, slightly deeper on purpose. I'm using my Bitfinex chart because it's empty, but in any case, the market spiked both of those lows, and the response has been rather impressive. So on the monthly time frame, 20k is still acting as support, and it's good to see some buying interest below those swing low points. I think that's all we can reasonably infer from the monthly time frame for the time being. I think everything else, sort of the weekly and the daily, does better. If you want to take a very rudimentary view, you would be forgiven for arguing that now that we've sort of spiked the bottom of the range, the top of the range is at the very least 23, 24k, the highest candle body, perhaps as high as 24.7, 25k as the candle wick. So some confluence there, as we'll see in a moment. The weekly time frame is the one, suggesting non-trivial signs of strength. Obviously, this has been a very downtrendy market for a while now, and even within this consolidation, as we've complained at length, Bitcoin wasn't really playing ball with a lot of the counter-trend moves the markets have offered. So this is, while still conservative, some good signs emerging on the weekly time frame. Two things specifically are meaningful. The first is this weekly engulf that we have on BTC USD weekly, and by engulf, I mean it traded below the low of the previous week and closed above the high of that same week. That's a nice weekly engulfing. Further context to that, it's not just an engulfing in the middle of nowhere. It is one that's taking place around the 20,000 very important high time frame support level, suggesting some demand finally stepping in at that round number. And also, and finally, structurally, that weekly close itself ended up being significant because it resulted in a reclaim of this mid 20,000s cluster. As you'll recall, this sort of weekly structure here between 20.5 and 21k. So 20.5, 21k was a sort of range midpoint, as we'll see in a moment. And this weekly candle engulfed the previous week's candle, bounced from 20k, and closed back above the weekly resistance, the midpoint of the range. Those are all very good signs and non-trivial signs of reversal. Now, again, some context and some humility. Bitcoin's still in the low 20,000s. It's nothing too crazy, but it's nice to see after months, essentially, some weekly time frame strength that actually means something in terms of levels, candle structure, or whatever else. If we look at this on a daily time frame, we can revisit the old range we had, and I think that's really where most of our useful daily sort of high time frame trading levels will come from, or where we can zero in on some of the structures. You'll recall the highest close of the range was 22.5k, the lowest close of the range at 19k, and if we were just to extend that, we got a nice little midpoint at 20.7. Now, I talked about in the last Monday markets that I need to see some sort of failed breakdown attempt, either through these lows stacked at 19.7 or at the range low itself. And for those long-term observers of Technical Roundup, you'll be aware that this is a setup I very much like, where the market closes through a range level and the next candle ends up reclaiming it and looking quite impulsive. In this case specifically, not only did it close below and then close back above, it also spiked the previous day's low before doing that. That was a very good signal. I try to buy it at the level itself, which is usually the setup I take once these reclaims form. The market didn't let me and just ended up pushing higher, and it's towards the range high now actually. So very impressive move, very one-sided, all green across the board on the daily, and no visible pullbacks yet, which is something we'll discuss momentarily. So taking into account this sort of weekly and daily range and where the market is right now, I think if this is going to be a classic Bitcoin sort of very big move that's not going to give any pullbacks whatsoever, you're going to want to see a similarly strong close through 22.6, 23k, and then for things to just catalyze higher towards 30k or whatever it may be. As we know from many live streams, that's our first trouble area, this pre-breakdown range. at 28 to 31. I'm sure if Don were here, he would say that a breakout out of an accumulation this long probably wouldn't stop at the first resistance. That's a very reasonable argument, but for the time being, or at least given you get weekly updates anyway, it's worth bearing in mind what's above us and having a plan for it, or at least being aware, right? So if this range breaks to the upside, which would be suggested by a close above its range high, which is 22.6k, I think your reasonable or even conservative first target is the pre-breakdown range at around 30k, round number, all that type of good stuff. Now, if the market still remains range bound, we have some good levels to work with as a result of how strong this rally has been. First and foremost, I probably personally wouldn't be outright long into resistance unless you're very comfortable catalyst trading. Now, I'm sort of jumping ship here from the technicals for just a moment, but we both have the Ethereum merge coming up in 2 days. That's the 14th of this month. And then if you look at the traditional finance world, we have CPI, inflation data coming up on just the day before that, which is tomorrow, so Tuesday, the 13th of September. These will be some, I think, very meaningful volatility catalysts. I think especially the CPI, even more so than the merge, will push markets around a bit and certainly give us a sense of direction for legacy markets, and will sort of, I think, follow along, for lack of a better term. So I think buying resistance on a vertical rally, buying the top of the range on a vertical rally like this probably isn't my go-to idea, to put it one way. But if you want to wait for the dust to settle, I think post-CPI / post-economic data, we might get to trade some decent levels. So if it's very good, if the number comes in soft or what have you, inflation looks peaked, etc., I expect this range high to get busted, right? Close above, strength, whatever. And as long as prices don't end up turning into some sort of Burj Khalifa wick and trading back within the range low, which would be surprising. I think the fourth time breaking this level, especially coming off the relative strength that we've had, would be probably the one to go. But in any case, I think if the data's good and the market follows through and breaks the range high, there may be a very messy but still reasonable momentum continuation setup to take it into this aforementioned resistance. If you don't want to buy resistance into news, there may be a continuation setup to buy after the news, depending on the nature of the data. And I think it's one of those cases where, purely from trading experience, it may not look like if it breaks higher, it may not look like on higher time frames that you had a clear entry, but there's so much volatility and so much puking going on low time frames around these news events. If you're fishing for wicks on the 1 minute or 5 minute even, you're very likely to get them. So I think a reasonable trade idea could be not to buy this resistance outrightly. If the inflation number is good or conducive towards easing or less aggressive tightening, whatever it may be, as long as you don't get any crazy wick and rejection, etc., there may be momentum continuation available to the upside, and for this to turn into some kind of melt up. Now, I don't love that trade idea personally, because I'm a terrible kind of raw momentum continuation trader. So what I would like, at the very least, something I'd be much more comfortable with, is the market testing somewhat decent or now established levels, at least on a day trading basis. So I think there are two of them. The first is this daily cluster at the midpoint of this range, again at around sort of 21k or thereabouts. This is very pivotal. We know this has confluence on the weekly time frame as well, but basically lines up exactly with the range midpoint, pre-breakdown support. You get this move down and then completely engulfs it. So I think if you get even if you get a bullish number that ends up having some down spikes, etc., for this thing to pull back, your first meaningful area of high time frame support is 20.7 or thereabouts. Basically, blue box and or daily and weekly range midpoint is the first real high time frame area to do business as far as what's below us as support. And one other structure that I wouldn't ignore is actually this. It's slightly below the mid-range, but in terms of high time frame wicks, it's very good. This kind of pre-breakdown range at 19k to 20k. So not only do you have round number confluence there, it's slightly below the range midpoint, so you could get some greedy sort of discounted wick entries there if you like the level. It's much closer to your invalidation as well, so the risk reward is probably better, and it's just a nice untested level. So you'll remember in the bull market, the structure we always referred to as sort of impulse, consolidation, impulse, consolidation, etc. And these would typically turn, the consolidations between the impulses would turn into good support resistance structures. I think we have very much the same structure building just in the downtrend here, where you had impulse, consolidation. We know that's where the range midpoint is formed. We had another impulse, consolidation, breakdown and then reversal. So this was the final consolidation before the failed breakdown. And also, we know it's a 20k round number. So for me, there is some technical significance here as well. If the market responds poorly, or if you only want to do business at extremes, I think that 19 to 20k cluster is worth bearing in mind as well. And I think we've spoken at length on the upside, which is to say that, if this is a real melt-up type of situation, the weekly engulfing has followed through, the legacy world lines up correctly, all that type of good stuff. I think our starting point should still be 29 to 30k, but it could well be higher given the length of this range that we've been in. So something to bear in mind. Of course, I've kind of covered the optimally sort of peak optimism scenario where this thing just melts up, consolidates at resistance, number good, everything melts up, Bitcoin goes with it. Of course, there's a similar doomer scenario that must be considered. And again, scenarios are one thing, trades are another to some extent. The trades I'm interested in are more centered around the good levels we have built at around 20k. And something even on a day trading basis, if I get a dip into the extreme of this pre-breakdown cluster, I might just scalp it to sell into the midpoint itself. So again, these levels aren't prescriptive as to the types of trades you take at them or the holding periods or whatever else. I just think those are the types of structures that will likely have participation if the market gets there, and what type of ideas you want to build and your risk sizing, targets, all of that I think should come from you to some extent, or at least not be nearly as prescriptive, especially in the absence of the data itself, right? But in any case, as we've covered that optimally, the most bullish scenario, and another one to bear in mind is if the market just looks terrible and inflation comes in much higher than expected and the whole, tightening argument rears its head again. I think at that point you have to consider that any weakness below the range midpoint is probably for selling into a revisit or at the or possibly a breakdown of the range low. I think that's maybe a long-winded way of saying this market is unlikely to go anywhere or particularly far if the numbers suck and legacy continues to suck. So we're all kind of hoping for just a good number to allow risk assets to breathe and for everything else to follow on as a result. We're not in the driver's seat here. The levels per se aren't in the driver's seat here. I think it's just inflation data and how risk, the big boys respond, and as far as S&P, Nasdaq, etc., and we're just sort of riding their coattails to a large extent. That's what really matters. I think the levels are good for intraday trading and good for color, but I think in terms of keeping our eye on the prize, it's really how the market, what data the market gets and how it responds that will be very telling. And again, there are some edge case scenarios that I could argue where if the number's really bad, but maybe you get a lot of relative strength, that might be worth longing, so on and so forth. But I don't want to give you 10 equally useless scenarios and I'll look right if one of them comes to fruition, right? We don't have the data yet. The market's at resistance, and I can tell you what levels I think look good and some possible trades that may come from them. And this, given this is a weekly show, we can delve into more detail once we have more candlesticks, which is a favorite saying of mine. That was very rambly, but hopefully it makes sense for BTC USD. The purely technical is that 19 to 20k is support, 23k is currently a resistance. This is your range, and that's all she wrote for the time being. Now for ETH, I'll try to be slightly more concise. Looking at Ethereum, you'll recall that the daily ranges that I quite like are sort of this 1.7 to 2k range low to range high, and also to the downside, the sort of 1.2k to 900 range high to range low, and you can sort of cluster off the market at those extremities, which can be done like this. This is a chart we've been following for a while, I think, from previous Monday markets. In terms of kind of Ethereum at the moment, again, narratively, we've got the merge coming up. I do think the CPI data is just going to be more important than the merge at this point. I know it's an unpopular opinion or whatever, but I think in terms of market impact, CPI and how the market, how legacy responds to it is much more important and significant than a sort of event that's known to a large extent, unless it goes terribly wrong. I think the market's currently pricing in just a fairly orderly, successful merge, and people just want their forked proof of work coins. I don't think the market at the moment has had any reason to price in some sort of doomer scenario, etc., and that's fine. But obviously, I think it goes without saying, if the merge goes terribly wrong and there's a large technical failure or even a delay, I think at this point, then that will be very bearish for Ethereum price, way to state the obvious, and just not great for crypto in general. So something to bear in mind there, and I think just the takeaway point is in terms of relative market priorities, I still think the macro data is a much more potent catalyst than this known Ethereum event. at least the way the market's currently pricing it. So in terms of technicals, you all know that I wasn't terribly fond, although I had it on my chart, of this mid 1500s level. That ended up being support, very nice number go up. And at the moment, just like BTC, ETH is in an area of resistance. If we look at this range low cluster, the market closed above the level, but closed within the cluster. It's not like a decisive signal necessarily. I think a second daily close above the level itself, this sort of 1700s line in the sand of sorts, especially if it results in a spike of previous day's low. So kind of spike yesterday's low and close back above support. That might be a decent sort of range reclaim signal towards 1800, 1900, and 2000. So purely technically speaking, that's what's up. If the market dips, unfortunately, our first stop is the same 1500s pivot, even though I really don't like it. And then the kind of doomer range to trade if the market's very weak is back at 900 to 1.2k, which has been untested, which is disappointing given how good the range is and how good the levels are, but not terribly surprising given how much ETH ran away in the first place. Now again, I just want to add context just from a purely trading point of view. While it may seem that the levels themselves give rise to ideas, unless you're very comfortable in your current positions, it would take quite a persuasive argument to get me to position into the merge and into, more importantly, the CPI data, unless I have some sort of edge or insider trading, insider advantage or very fast informational flows. And even then, that's an after the news event, right? I think for most of the ideas you might have in your head right now, either from my charts, your charts, speaking to people, etc., there's a very decent likelihood that trading them after the news will be better on a risk-adjusted basis than trading them into the news and holding the coin flip over which you have, no edge or understanding of what's going to happen will somehow turn out in your favor, right? So I really do believe, as boring as it sounds, that we have such a cluster of meaningful things with, inflation data tomorrow and the merge the day after. It won't hurt now that the market is around decent levels to just wait for those to blow over, wait for some stops to get blown out, and then let the market set the tone for the days and weeks to come. So whatever trade ideas you have, hold on to them. I think there's a decent chance you can get good or better entries if you let the dust settle and then take those ideas. And again, even the CPI stuff, etc., there's still a decent chance that trading after the event and once the initial stops get blown out on the headlines will give you better entries and better trades than trading into the event where you're literally flipping a coin, not knowing what's going on. But as far as ETH levels go, this is what matters to me. Again, the proviso that even though I don't like it, this 1500s is still the first area of daily support below us, and it's currently in an area of resistance at 1700. That's more or less it for ETH USD. For ETH BTC, I think this comes from the monthly time frame. I just kind of drew the highest wick, the range high on a wick basis, which is not something I do terribly commonly, and it looks like there's some resistance in that area. There's also the added confluence of the market attempting to push above previous month's high, and it's currently, pushed above previous month's high into resistance, and it's currently below the monthly open and finding some difficulty there. The weekly chart doesn't look broken by any means. Nothing particularly scary is going on, but you can just kind of eye test that this is an area of resistance, and the market slowed down and stalled there versus the breakout we all wanted to see, which is fine. If it remains range bound, I think we have pretty clear levels to work with as far as, range high 0.08s, range low closer to 0.06s, and I'm sure there's a decent midpoint somewhere at 0.07s as the maths would suggest. But yes, absent an ETH BTC breakout, that only adds further strength to the argument that a lot of the merge price action, we're seeing the second half of it, and we have other things to focus on as market participants at this point. I think a supplementary argument to that Ethereum is less in the driver's seat than it was, let's say for the past two Monday markets or thereabouts, is that the strength from the bottom came from BTC. That's really the chart that blew up and looked really strong across high time frames and had that 10% impulse day, etc., just as ETH BTC hit resistance. So recent evidence, even though it's not narrative evidence, but recent market data would suggest that, BTC is clawing some of that back. I think it's got just as good, if not better, levels. It hasn't got any narrative fatigue or uncertainty around it. And I think with ETH BTC finally slowing down at resistance, the people just might shift their focus to some sort of rotation game to where BTC plays catch up and the BTC dominance trade, so on and so forth. So ETH, still very interesting, still good. I'm just not a huge merge guy, certainly at this point. I think ETH BTC is at the range high / resistance, and we're seeing signs of selling, although tentative as they may be for the time being. It wasn't a range breakout. It seems like resistance is intact. And as far as the other point, which would be, but the merge, I think CPI data, which is earlier and more impactful, is very much in the driver's seat compared to that. And I think ETH BTC just has good range levels to work with, so why not pay attention to those at this stage? As far as equity indices go, that type of stuff, the levels have been good, to be honest. The sort of over-under 3,900 level on the S&P acted as support, sort of tick perfect to the close, all that type of stuff, very nice. As mentioned, the first weekly level of resistance for me is 4170s or thereabouts. I'm sure there's some intraday stuff you could add to be a bit closer to the mark. Pre-breakdown support at 4120s to 30s, whatever. But as far as good high time frame weekly structure goes, supported, and I think for resistance to start resisting, it's a bit higher up. Same proviso goes. Unfortunately, yes, TA good, high time frame levels good. They've all been very helpful, but we're still very likely to be bound by the data that we get tomorrow. So keep an eye out for that. And in the same vein, not a huge fan of positioning ahead of the data unless you're already very comfortable. Similar story for the NASDAQ, which is that monthly cluster is acting as support, which is nice. If you want to be really conservative, you could argue that it's already hit an area of weekly resistance in the form of these lows and this most recent range high. Fine, okay. Less clear chart than the S&P, but you can clearly, you can see that there is some structure here. As far as these markets go, I think the more useful period for Signal was when they were at monthly and weekly support, which is when we wrote about it in Technical Roundup and discussed it on Casual Friday, etc. Now that the bounce is playing out, and I think the catalyst on the horizon isn't purely technical, but more kind of economic or data-based, etc. Purely levels trading will be slightly less useful, and I think it'll be more useful to look back at it next week and say, we've got the data, we know the numbers, here's how the market should have reacted, here's how it actually reacted, and here's what the technicals look like now. I think it'll be a very productive Monday Markets episode next week. For the time being, I think sort of left you with good levels, some ideas to chew on, and hopefully if you're kind of panicking or flurrying into the CPI plus merge, you'll understand that there's always another trade, and I think that other trade is often better post-news than directly into it. So that's all from me. Again, check out FTX in the description for supporting the show. Mobile trading app, spot trading, portfolio tracking, no liquidations, all that good stuff. Support them because they support us. Normal YouTube algo stuff is appreciated. Leave a comment about what you thought about this long, somewhat rambly video. Leave a like if you're merciful, and I hope to see you later this week. And most certainly for the newsletter tomorrow, which you should get because it's coming out on CPI day, trletter.com, free newsletter. Go get it, do all that good stuff. And that's all from me. Until next week.